And this is Dave White sitting in for the one and only Tom O'Brien. I think he's back tomorrow. He's out having dinner, or at least last night, with our friend Andy Heck. And I'm waiting to get all the dirt from Andy. He's been very tight-lipped so far. I'm wondering if we have any kind of like bachelor party stories to go with it, but haven't heard anything yet. Anyway, it's another wonderful day, and of course I'm your squeezably soft host, sitting in for Tom O'Brien on a market that has gone nowhere fast. We certainly had a lot of promise for the bovine this morning. The market, the futures anyway, showed about 5 points higher. We opened 10 points higher. They pushed the market pretty much for the first 30 minutes until news came out, and that was not good, and we had kind of a retracement out here. As I look at options, at least for the data last night, it continues to look like we have some kind of close around 2080 on Friday. At least that's what the option market makers are looking at. We closed once again under 2100 on the S&P cash. We again closed under the 5,000 mark on the S&P. And of course, the one holdout out here is the Dow, which we'll talk about in a second. But, you know, we've got always something going on here at TFNN. I always like to open my shows with a little bit of history.
Then it's all just a little bit of history repeating.
On this day in 1846, the U.S. Congress overwhelmingly votes in favor of President Polk's request to declare war on Mexico in a dispute over Texas. Under the threat of the war, the United States had refrained from annexing Texas after the latter won independence from Mexico in 1836. But we went to war in 1846 for Texas, and that is the place my mother bored me. So Texas has, I will always be a Texan. So I'll always like that. But I do digress. We'll go right into it. On the S&P 500, we closed out at 2,098, the NASDAQ at 4,981, and the Dow at 18,040. Up a little bit on the NASDAQ, down 1 or 2 points. What was it? Down 64 cents on the S&P cash. Again, we had a little bit of news, and we'll talk about that in just a minute. For you gold bulls out here, the bovine and very radiant silver and gold bulls had a good day out here, up almost 2% in gold and 3.5% in silver. Gold closed out at $12.14 today. Silver, $17.11. Crude, little changed, $60.24, although it also tried to rally and ended up kind of fizzling out by the end of the day. After the close tonight, and maybe we've got the data already, I see we have JCPenney already out, and it's up a couple pennies. After the bell tonight, Cisco Systems, Digital Ally, which is, of course, the company that makes those cameras for police, the on-body cameras. X1, a rather beaten-up 3D printer company. Shake Shack, which was up $2.50 already, the rather new IPO out here. And it's going to be interesting to get the first blush on that, the first after-hours reporting on what Shake Shack is doing. Don't expect a whole lot change in that yet. And Bishop Holdings, plus others out here, will report those as we get the data. Maybe people in the den will tell me when they come out. Of course, we're going to be looking in until tomorrow, and before the bell, problematically, we've got Kohl's. Now, the reason I say problematically is that's pretty much where the market turned today, and that was sales and retail. Kohl's is a major retailer. Perry Ellis, of course, the perfume, T-shirt, and other men's apparel company. I think it's all men's. I've never looked for Perry Ellis's and women's. Maybe they've got it. So a little bit of taste of retail in the morning, and that taste had the market in a spitting fit after that data came out this morning. After the bell tomorrow night, probably some stocks that could move the market a little bit more. AMAT, Eagle Materials, Jack in the Box, King Digital, Sina Corporation, and Symantec. So we still have a few earnings coming out after the bell. Of course, before our markets ever opened, industrial production for China came out. They basically missed a little light. Especially this was disconcerting because of the 4 rounds of interest rate cuts that they've had seem to have not changed anything in China. While retail sales did jump 10% year over year, they were still way under the push for 10.5% that economists were hoping for in China. That made things kind of a little soft, and I think there were China, most of the indexes there were off 0.5% or so. Of course, the numbers here in the United States were not any better, and many economists out here were rather troubled to see at least 2 rounds of retail numbers that should have been much better after everybody dug out of the cold winter, and it continues to be problematic. I, on my radio show today, said that we are probably going to start hearing about the R word fairly soon, and that R word is recession, where basically even the most optimistic U.S. estimates are for 1.5% growth. My guess is those are probably even a little high, which means that we could see a little dip maybe in the next 2 quarters. I'm not saying that we're going to drop, 3% or something, but wouldn't be surprised to see us tuck under and see in the next 6 months maybe something like 0.1% under natural growth. We need about 2% just to tread water, and that probably will be enough to keep the Fed out of raising interest rates this year. But at the same time, without probably a QE, it will not help anything. This probably is welcome news to the Fed because they would love to see the market wring out the excesses that we've had. I played this clip occasionally on my show. I played it today. I want to play it again today because this may be the most intelligent thing that anybody's said in the last couple of months.
So what we need is for markets to consolidate in the middle. Instead, markets go one way or the other. So when we have really good days, that actually makes Fed officials nervous. Right.
Because really good days in the markets, you mean?
Really good days in the markets because it takes prices beyond what's justified by fundamentals. They worry about excessive risk-taking.
Well,
they worry about
down days either.
And they don't like down days either, right? So what we need is a period of consolidation. The trouble is that the markets won't stay in the middle. The markets will either be discouraged by very low rates and go into high risk-taking, or will switch the other way around.
Anyway, to me, that's it. We've got... the market tends to be bipolar. I always like to say that it's kind of like that James, what's his name? I've seen fire and I've seen rain. James Taylor. Kind of a bipolar view of the markets. Not a lot of reason to leave cash in a stock if it's not going higher, and not a lot of reason to sell the stock if it's not going lower. And that continues to be, either things are good getting better or bad getting worse. You don't have a lot of market participants that are just saying, I think the market's going sideways for a while. I'm just going to let my cash sit out there and stew. So the question is, do we get enough of those people out there? Cisco Systems out after the bell, not a lot of movement. It's off maybe 1%. So we're at least getting the first move out here. My guess is that we're going to know a lot more about Cisco after the 5 o'clock Eastern hour as they get into their conference call. The reason why is just how the change of Mr. Chambers, who is leaving as the CEO, will handle the handoff, and whether or not the current or the to-be CEO is going to start working. My guess is that in that 5 o'clock hour, we're probably going to hear a little bit more about how the strong dollar, hurt Cisco, even though the Internet of Things is making business good at Cisco. It's going to be kind of tough. My guess is, and generally the pattern is to see stocks when the CEO changes dip a bit because CEOs, especially getting ready to go out the door, like to try to make sure everything looks as pretty as possible. And it's not uncommon to see a pullback, or at least a small pullback, as the new CEO takes care of the problems that the old CEO left in place. Not untoward and not unheard of, but down just a little. So other things going on out here, probably about it. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com. And if you're in the den, you can post a message, and I'll try to answer it.